We've once again been seeing a bullish move in US stocks this week, and one of the reasons for that has been the focus on the Federal Reserve. Of course, we've had the chairman, Jerome Powell, testifying before the Senate Banking Committee and dealing with their questions. Can sometimes get intense, but more often than not, they're quite kind to him. But what we've discovered is that the central bank's stance towards monetary policy hasn't really changed. But one recent development, at least in terms of the markets, has been the rise in treasury yields. Now, you get a lot of doomsday merchants out there that latch on to things like this and talk about taper tantrums and so on. But before we get into all of that, let's actually see what Jerome Powell himself had to say about it.
Been monitoring the increase in treasury yields from about 0.9% at the start of 2021 to approximately 1.37% when the market closed yesterday. I understand that this reflects a view of an improving economy, but also comes with increased borrowing costs, increased inflation, and potentially a move by the Fed to increase interest rates down the line. How do you view the increase in treasury yields in the broader context of our economy at this point?
So first, we look at a broad range of financial conditions, and that's one. It's an important one, but really we look at the whole range of financial conditions, and it's very important to ask, why are rates moving up? And so if you look at why they're moving up, it's to do with expectations of a return to more normal levels, more mandate consistent levels of inflation, higher growth, an opening economy. In a way, it's a statement of confidence on the part of markets that we will have a robust and ultimately complete recovery. So those are the reasons that are behind that move, I would say.
Now, you'd hardly expect him to come out and say, oh my God, this is a disaster, everyone panic. But I think you can kind of gauge where he's going with this. Overall, he's seeing this as a statement of confidence in the economy. Now, whether or not that's true, whether he actually sees it that way or not, I think it's clear that he's not exactly concerned about it too much. And he's seeing it as an indication of potentially faster growth in inflation than previously expected. But despite all of this, the Fed isn't yet ready to change their dovish policy stance. They're still committed to purchasing $120 billion worth of assets each month, $80 billion of which, of course, are Treasury securities, and keeping rates near zero until further progress has been made towards the 2% inflation goal and full employment. So we're not going to see a taper tantrum just yet. But obviously, sharply higher yields are a risk, especially if the stimulus is wound down quicker than expected. Now, interestingly, with stocks, we saw the S&P 500 test the long-term trend line that I've been showing you. Well, I've shown you on a number of different occasions. It tested it earlier in the week and failed as a type 1. So despite the heavy momentum in that bearish move towards it, the level held up very well. It came off it from lows, and it's all been pretty bullish from there. Meanwhile, looking at the Dow, we've had a strong move through the upper baseline and closed at highs, which now means that the path of resistance is below, suggesting that there's plenty more room to come in this bullish move. Now, one of the reasons that we started this channel was to give an independent, non-biased voice of what's happening in the markets and to let you know what's going on. And what I noticed at times like this is that in the mainstream press, you tend to get the people who are permanently bullish and telling you to buy stocks, your Jim Cramers, people like that. And then on YouTube, you tend to get people who are perma-bears and always talking about market crashes and all the disasters because they know it gets clicks and views. So let me just tell you briefly how I see it. We've obviously had this week the news, at least in the UK here where I am, that we're going to be coming out of lockdown. There's a roadmap, and by midway through this year, hopefully we can really start to put this pandemic behind us. We've heard what Jerome Powell has to say and that maybe the economy is going to be sort of recovering from this quicker than ever. But in terms of speaking to people and hearing what's going on, at the start of the pandemic, the people that I speak to from financial services, people who are in client-facing roles, people who are running funds and the infrastructure for banking and things like that, projects were being put on hold, right? There was a lot of uncertainty. You had some people who are very clued up on all this kind of thing saying they think it's going to be years before things get back on track, before, we're out of this big slump. And so everything was on hold. Long-term projects were frozen. Hiring was frozen. Everything seemed like, what the hell is going to happen next? What I'm hearing now when I'm speaking to the same people and more is long-term projects going ahead, now planning for not just what's going to happen coming out of lockdown, but the next 2, 5, 10 years. Huge scale projects that lead to job creation, that lead to bigger earnings and pushing things ahead beyond where we were at the start of the pandemic. So while you get the focus from everyone about recovering from the pandemic and when will we be back at pre-pandemic levels, I think the more positive thing is the uncertainty is moving out of the way. We're getting a little bit more stability here and people can start thinking long term. So it's not about the immediate reaction after the pandemic, but more the fact that all of these projects that were frozen for a long time, all this pessimism and negativity is switching to optimism, thinking for the long term, putting your money where your mouth is and building projects, building, things that are going to progress the economy. Anyway, I'm waffling now, but I just wanted to give you that, just my own opinion, maybe give you a bit of peace of mind, because I look on YouTube and I'm like, wow, people are really willing to mess with people's heads to get some clicks. So there's a more balanced view, and that's genuinely what I believe. I think things are looking very positive now. Maybe there'll be hiccups, maybe there'll be a taper tantrum, but I'm not worried. All right, so that's all for now. I'd love to know your thoughts in the comment section. Hit the thumbs up if you do agree with what I said, or just if you like hearing my opinion on these things rather than just reporting on it. And I'll see you in the next video. Thanks for watching.